Hello traders, welcome back. This is my analysis for the euro versus United States dollar, in which I'll discuss my point of view regarding the graphical analysis and the opportunities for the week ahead. If this is your first time here and you'd like more videos like this in the future, make sure to subscribe. Now I'll first look on the weekly chart, where the bias is neutral, and that's because although price is in an ascending trend, closed above this 1.2288, printed this Pinocchio bar, this pin bar, which happened to falsely break this level. It also printed this troublemaker here, and I call it a troublemaker because a bar or a candle such as this should have been followed by a bullish candle, which basically confirms its message. And here's an example. Pin bar, which is followed by a bullish candle. And look what happened. And this is also valid for inverted hammer pattern, which, if it's printed at a support zone and followed by a bullish candle, behaves like so. So you can easily see the things how work out. This is another example. So an inverted hammer at the support zone, which is followed by a bullish candle, which confirms it, which enriches its message, and look, an appreciation. And again here, not the most interesting and the happiest inverted hammer, but it also happened to work out because of the same reason. It was followed by a bullish candle, which again confirms its message, and look what happened. Price appreciated. However, here, after this bar, after this candle, I can see this candle, which doesn't inspire me in any bullish way. So yeah, the trend is ascending, everything is perfect, but maybe it's not the right moment right now. So yeah, this is the situation here, and this is the reason why the bias on the weekly chart is neutral. Now, on the daily chart, the situation is the same in the sense that the bias is also neutral, and that's because this is an obviously ascending move, and it has been ascending with arguments, to say like so, because of these higher highs and higher lows. But what I can see here, I can see that price is printing this lower highs and lower lows. So it looks like it's trying to turn around. Okay, so again, this upward move, which now looks like is running out of steam. This is one point. And the second point is this pattern here, which can be seen as an engulfing pattern, a bearish engulfing pattern, but also as a bullish free line strike, which looks like so. Three candles, every new candle closes above the previous one, and one last candle that closes beneath the opening price of the first candle. Now, in theory, this pattern is a bullish one because the idea is that after this upwards move, the bulls are booking their profit, thus printing this downwards move, and the upwards move will continue after this profit-taking phase. But in reality, it looks like this pattern is actually a bearish pattern. So you can consider it an engulfing pattern, you can consider it as a free line strike with a bearish expectance, but the idea is that price, at least based on this argument, is expected to continue lower. Now, the idea is that I would prefer to wait for something clear. I would prefer to wait for price to get above this zone here, or I would prefer to confirm, to see it getting around this zone and confirming it as a support in the light of this weekly ascending trend. Or I would wait for price to break this level here, 1.21 psychological level, 1.2092 on the chart, which would mean that price is actually exiting this ascending trend, again, I would wait for price to confirm these zones here as a support, here as a support, or here as a resistance. But if I would really want to profit from this downwards move, I would sell in the light of this pattern, but I would sell with a smaller volume. And why? Because price, I prefer opening trades near important zones. Okay, so here is an important zone because you can see price rotated here. Here again is a resistance, so price confirmed a resistance, an important resistance, but here price is somewhere in between these two important lines. It's right in the middle, so it could go anywhere. So that's a reason why I wouldn't be that interested in opening trades. But if I would really like to speculate something, I would do it by means of a sell order with a profit-taking zone just above this psychological 1.22. This selling opportunity might materialize if price goes above this level, this 1.2335, and then gets under it, or after a consolidation and a downwards move that breaks the low of this candle here. So that's it. Thanks for watching. Remember to like if you enjoyed this video, subscribe if you want to get more videos like this in the future, and comment to let me know what you think and what you'd like to see in future videos. Trade well and take care.